Welcome back to Explain the Charts, everyone. Today is July 20th, 2025, and we're about to embark on an in-depth analysis of EURUSD, combining the latest news with raw chart data. Recent headlines are buzzing with the euro's performance, as EURUSD recently surged above the 1.1600 area, recovering from a one-month low. This notable rebound is largely attributed to an improving risk mood in the global markets and dovish remarks from the Federal Reserve, suggesting a potentially less aggressive stance on interest rates than previously anticipated. However, it's not all smooth sailing. Reuters reports from just a few hours ago highlight concerns over U.S. tariffs and a weak dollar threatening Italian exports, leading EU officials to Washington in an urgent bid to save crucial trade deals. While the euro did fall to $1.16 recently, experiencing its lowest level in about a month due to a modest US dollar rebound, the current live rate on trading platforms, mirroring our latest data, stands at approximately 1.1625, showing a slight positive change over the past 24 hours. This indicates that despite underlying economic friction, the immediate market sentiment has been largely bullish for the euro. Now, let's turn our attention to the one-day chart to gain a broader perspective on EURUSD's movements over the past year. Looking at the overall trend, we can clearly see a significant bullish push from early March 2025, where the pair was trading around the 1.04 level. This long-term upward trajectory suggests strong underlying buying interest and a positive sentiment shift towards the euro. We note a key resistance level around 1.12, which was a significant peak in August 2024. Its decisive break in March/April 2025 confirmed the strength of this current uptrend. Currently, the price is approaching levels last seen in late 2024 and early 2025, particularly the 1.16 to 1.17 zone, which will act as a critical area of resistance. On the support side, the 1.04 mark appears to be a robust long-term base, having held firm repeatedly. More recently, the 1.09 to 1.10 range provided solid support before the dramatic March-April rally. A closer look at the candles around July 17, 2025, reveals a dip with a low of 1.15546 before a strong rebound to close at 1.1625. This perfectly aligns with the news of the euro recovering from its one-month low and surging above 1.1600 due to changing risk sentiment. To examine the very recent price action that correlates with the news, let's switch to the 15-minute chart and zoom in on the last few days. We're filtering the view to show the dynamic period from July 17, 2025, 6 o'clock Universal Time Coordinated through the end of the available data on July 18, 2025, 2057 Universal Time Coordinated. Here, we can clearly observe the intraday volatility following the daily candle's significant dip on July 17. Notice the candles around 1512 Universal Time Coordinated on July 16, where price dropped to 1.16162, followed by a strong recovery. The short-term trend shows a clear bounce from the 1.155 level, which acted as immediate support after the dip, confirming the buying pressure mentioned in the news. This granular view allows us to pinpoint smaller consolidation zones, like the tight range around 1.161 to 1.163 seen throughout July 18. Traders should note that significant volume spikes, particularly on the recovery candles, indicate strong conviction behind the price move, making these levels important for short-term entry and exit strategies. Now, let's shift to the 1-hour chart to observe typical hourly patterns and volatility, although it's important to note that the data available here is from an earlier period, specifically from June 30th to July 3rd, 2025, and does not reflect the absolute latest price action up to July 20th. Despite this timeframe still provides valuable insights into intraday dynamics. Focusing on the period between July 1st, 2025, 12 o'clock Universal Time Coordinated and July 2nd, 2025, 12 o'clock Universal Time Coordinated, we can see how the price moved from around 1.181 down to roughly 1.175 and then partially recovered. Observe the string of smaller-bodied candles, often indicative of consolidation or indecision, before a larger directional move, such as the drop around July 1st, 1400 hours Universal Time Coordinated. These hourly swings present opportunities for scalpers and day traders looking to capitalize on smaller price fluctuations. Keep an eye on the opening and closing prices of each hour. Strong closes near the high of the candle or weak closes near the low can signal continuing momentum or potential reversals for the next hour's trading. While not current, these historical patterns demonstrate the typical rhythm and volatility traders can expect from EURUSD on an hourly basis. In recap, EURUSD has demonstrated strong bullish momentum from its March 2025 lows, currently trading around 1.1625 after a notable rebound from its recent one-month low. Key long-term support stands firmly at 1.04, with more immediate support identified around the 1.09 to 1.10 range and, more critically for the short term, at 1.15. On the upside, previous highs around 1.17 and 1.18 remain significant resistance levels that the pair needs to decisively break. Looking forward, a bullish continuation is moderately to highly likely, perhaps around 65% probability, especially if dovish Fedspeak persists and the ongoing EU-US trade deal talks yield positive outcomes for the Eurozone. A sustained break above 1.17 on the daily chart, backed by strong volume, would be a robust signal to reinforce this bullish outlook. Conversely, a bearish reversal, with a moderate probability of around 35%, could materialize if trade tensions escalate, the US dollar unexpectedly strengthens due to hawkish Fed shifts, or if upcoming Eurozone economic data disappoints. A clear breakdown below the 1.15 support level, particularly with increased selling volume, would confirm a short-term bearish bias. Traders should closely monitor major economic announcements from both the Eurozone and the US, including CPI, GDP figures, and central bank statements, as these events will be pivotal in shaping the next directional move for EURUSD. Also, pay close attention to any developments regarding the EU-US trade deal mentioned earlier. A positive resolution could provide significant tailwinds for the euro, while a negative outcome could trigger a sharp decline. Always remember to manage your risk and stay updated with the latest news flow.